While being slightly pulses with activity, shares of Impinj Inc., trading under the ticker PI, are currently priced at $196.32, marking a significant intraday surge of $11.13, an impressive climb of over 6.01%. This vigorous upward movement is capturing the attention of traders and investors alike, painting a picture of robust confidence in the stock. But while many are seeing this as a straightforward momentum play in the thriving semiconductor and IoT space, they are likely overlooking a critical undercurrent that is truly defining Impinj's trajectory. The recent upsized offering of convertible senior notes, initially seen as a source of potential shareholder dilution and the cause for a brief pullback, has now been fully digested by the market. The reality is that this strategic capital raise, rather than being a sign of weakness, has fortified Impinj's balance sheet at a pivotal moment, arming it with the resources to aggressively expand its market leadership and accelerate innovation, just as the demand for RAIN RFID technology is set to explode. This isn't just a rally, it's a strategic repositioning that the market is only now beginning to appreciate. The prevailing expectation for a company like Impinj is that its fortunes are inextricably tied to the cyclical whims of the broader semiconductor industry and the pace of IoT adoption. Many investors, particularly those using platforms like Robinhood for Robinhood stock trading or setting up a Schwab Intelligent Portfolios account for the first time, categorize PI as a high-beta tech stock, a vessel that rises and falls with the sector's tide. They see the daily swings and assume it's all about macroeconomic data, supply chain news, and the performance of giants like Nvidia stock or Apple stock. The common belief is that to succeed, you just need the IoT market to grow. However, this view is dangerously simplistic. The deeper reality is that Impinj is not merely a passenger on the IoT wave, it is a critical enabler actively architecting the very infrastructure of this interconnected future. The company's success isn't just about the quantity of connected devices, but the quality and intelligence of those connections. Impinj's platform doesn't just identify an item, it provides a digital identity, location, and authenticity, transforming dumb inventory into smart, manageable assets. This is a fundamental distinction that separates Impinj from generic chip makers and places it at the heart of the digital transformation across retail, logistics, healthcare, and manufacturing. While others sell components, Impinj is selling a foundational layer for a new era of data intelligence, a reality that far exceeds the market's general expectation of it being just another chip stock. This nuanced understanding is what separates a surface-level online investment from a deeply informed one, whether you're engaging in self-investing through a Fidelity brokerage account or utilizing more advanced platforms like Interactive Brokers for sophisticated interactive broker stock trading. Analyzing the recent market activity reveals a fascinating narrative of resilience and institutional conviction. In the past several weeks, the Tesla stock has shown volatility, but Impinj has carved its own path. Trading volumes have been notably elevated on up days, suggesting strong accumulation by institutional players. Despite the brief dip following the September announcement of its convertible notes offering, the stock found firm support and has since embarked on a powerful recovery. This pattern indicates that sophisticated investors, likely those managed by firms offering Fidelity Wealth Management or those executing large block trades via Interactive Brokers, viewed the dip not as a red flag but a strategic buying opportunity. They understood that the capital injection would fuel growth, not dilute ownership. We're seeing this conviction reflected in the high percentage of institutional ownership, which provides a stabilizing floor for the stock. This is a crucial factor for anyone considering an investment in the tech sector, from those using the SoFi Invest platform for their first foray into SoFi investing to seasoned traders on the Fidelity trading platform. The reaction to the company's last earnings report was also telling. While the headline numbers were strong, the real story was in the forward-looking guidance and management's commentary on the growing pipeline of large-scale enterprise deployments. The market's positive reaction was not just a response to past performance, but an endorsement of the future roadmap, a sign that the expectation of steady growth is being replaced by the reality of accelerating adoption. For those unfamiliar with the core business, Impinj Inc. is a leading provider of RAIN RFID solutions. This technology allows for the wireless identification and tracking of billions of items. The company's platform includes endpoint ICs, tiny chips that attach to items, reader ICs, readers and gateways that read the tagged items, and software that processes and delivers the data. Think of it like barcode technology on steroids. A retailer can use Impinj technology to know in real time the exact location of every piece of apparel in its supply chain, from the factory to the stockroom to the sales floor. This visibility eliminates stockouts, reduces theft, and optimizes inventory management, driving significant ROI for customers. This isn't a futuristic concept. It's a proven business model that is rapidly becoming mission-critical for industries grappling with complex supply chains and the demands of e-commerce. Major global brands in retail and logistics are already deep into multi-year rollouts, a testament to the tangible value Impinj delivers. The company's older reports and past performance show a consistent trend of innovation and market expansion, steadily building the foundation for the explosive growth phase we are witnessing today. This is the kind of fundamental strength that long-term investors using services like Fidelity mutual funds or Fidelity ETFs look for, a stark contrast to the speculative fervor that can sometimes surround more volatile assets on the Robinhood app. Looking toward the future, the outlook for Impinj is exceptionally compelling, though not without its own challenges and risks. The primary catalyst is the inflection point we are reaching in IoT adoption. The expectation has always been that the Internet of Things would eventually become ubiquitous, but the reality is that its practical, large-scale implementation has been gated by technology and cost. Impinj's platform directly addresses these barriers, making enterprise-grade item-level intelligence both technologically feasible and economically viable. As more companies move from pilot programs to full-scale deployments, Impinj's revenue streams are poised for exponential growth. Potential catalysts on the horizon include the expansion into new verticals like pharmaceuticals and food safety, where traceability is paramount, and the introduction of next-generation chips with enhanced capabilities. Furthermore, any strategic partnerships with major cloud providers or enterprise software companies could dramatically accelerate market penetration. However, the path forward is not without risks. The semiconductor industry is notoriously competitive, and while Impinj has a strong patent portfolio, it must continue to innovate to stay ahead. Macroeconomic headwinds that slow enterprise spending could delay large projects, impacting quarterly results. And as with any growth company, execution is key. Any stumbles in product rollouts or supply chain management could be punished by the market. Investors using various investing sites and platforms, from SoFi to Fidelity, must weigh these risks against the immense opportunity. Comment below with your thoughts. Do you believe the biggest growth driver for Impinj will be retail inventory management or the expansion into new industrial applications? In summary, the story of Impinj Inc. is a powerful illustration of the tension between market expectation and underlying reality. The current stock price of $196.32 reflects a market that is beginning to wake up to this divergence. The prevailing narrative of Impinj as just another tech stock subject to sector-wide wins is being replaced by the reality of a foundational technology leader enabling a global shift in how businesses operate. The current intraday strength is not just noise. It's an acknowledgement of the company's strategic financial positioning and its critical role in the next stage of the digital economy. The expectation was growth. The reality is the potential for market dominance in a sector with a multi-decade runway. For those who can look beyond the surface-level chatter and analyze the fundamental drivers, whether they are making an online investment for the first time or managing a sophisticated individual brokerage account, Impinj presents a case study in how true value is often found where expectation and reality diverge most profoundly.